Right, hello everybody. Welcome to today's podcast. It's the 20th of April 2020. And well, today we're going to talk about all sorts of stuff to do with the FX indices and commodity markets. Big moves on the commodity markets, particularly oil today. We're going to talk about the stock market as well. As we move into US earnings season, a lot of commentary about the US stock guidance. And of course, actually, is the pandemic starting to slow down in some places, arguably, if you believe all the data. We are talking about some economic reopening as well. So there's a lot to go through. And to help me cut through all of this sort of stuff is our resident expert, Jerry Miller. Hi, Jerry.
Morning all. Hello.
Hi. Staying safe, Mr. Miller, we hope.
Staying safe. Locked away in my little home office. Absolutely.
Good. So, well, let us know, Jerry. What do we know? What's been going on?
Yeah, markets. Well, first of all, markets this morning. Monday morning, that is, starting the week a little bit on back foot with concern over US earnings. Of course, we're going to find out how things are really going on with some more Q1 earnings reports, but we'll get onto that later on. And oil slumping as well, and again we're going to talk about that as well. But last week markets sort of didn't do a lot. It was really US markets. If you sort of turn your screen off a little bit early on Friday evening, you'd have missed the last hour, and the S&Ps rallied 30, 35, 30, 38 points, something like that in the last hour. And it was a bit like that on Thursday as well, because we had some pretty dire news out during the week, and to see this sort of what I call a risk correction continue, it's just quite interesting to see some sort of positivity despite the bad numbers actually pervading the market. And I think
I was surprised by Friday evening's move, actually, because I actually saw that sort of big spike up, came right back down. All of a sudden we were trading a bit lower on the day as we got to about sort of 6 p.m. UK time, and I thought that's not a very positive sign, is it? And but of course a bit of profit taking into the weekend and so on. But yeah, it had a big old push again into the close. It was surprising. And actually that ended up with the best 2-week period on the US indices for 82 years, even though there's been 22 million job losses. Put that in your pipe.
We quite, and smoke it, as they say. I mean, it has been an extraordinary run of numbers, isn't it, across the board? But I'm whether the markets are right, the markets are just what they are. They're a living, breathing sort of market, and they don't do everything in a straight line, and the market and participants in the market are trying to decide what these companies are worth. And that's why, we were talking about some of the stocks that we can talk about now before coming on air, as it were. And it's just interesting to see how some of them have actually really outperformed, and how they have actually had quite an impact on the market. And it's not all rosy for all the other constituents, but but other than
Amazon being one of them, the amount of Amazon buses I'm seeing, buses, what am I talking about? Vans going through past my road it's ridiculous. So people are buying a lot on that sort of stuff, and of course that's been reflected in their share price as well, hasn't it, Jerry?
Yeah, absolutely, hasn't it? Just golly, I have to hold my hand up and say that to survive in terms of keeping body and soul together, I use Amazon a lot. Oh my God, the cardboard in my barn garage is just getting out of hand. But Amazon, absolutely. Market cap's gone through the roof. I think 1.18 trillion now, Adrian. It was around $1,680 mid-March, something like that. Now $2,400 a share. That's extraordinary.
And in fact, it's actually about 10% higher than its peak before this all kicked off. Not many stocks are higher now, are they? Let's face it.
Especially, that's right.
The fact that it's the biggest company in the world is staggering, really.
Yeah, but if ever this sort of pandemic played into their hands, with retail on its knees, apart from supermarkets, of course, up steps Amazon. If you can't, you can order drink, you can order bolts, you can order wood, you can order drills, you can get whatever you want. And the thing about it is, I would love to use independent retailers, but a number of them are shut down. because they're not
Yeah.
key to general everyday life.
I
Um,
do. I was actually talking to my wife the other day, no, yesterday, in fact, about what this pandemic and lockdown might mean for retailers going forward. Is this going to be an even further nail in the coffin of the high street? Because people now, the ones that weren't used to ordering online, are now having to order online. Suddenly, they're going to get more used to it. There's going to be more ordering online and sort of less on the high
mm,
street. I just sort of wonder if this is
mm.
not good
Well,
fundamentally for the high street.
at least a lot of retailers aren't suffering through having perishable goods going off, apart from the likes of garden centres and stuff. I mean, the hit to them is just extraordinary, and that's something you
Yeah.
just don't get. You don't get mail order. Well, actually, ironically, my wife did take delivery of some mail order plants for the garden, but it's quite a sort of specific technology that's used to deliver plants fresh in a box via the internet. And I just think you're right. I mean, are we going to end up with just coffee shops and estate agents on the high street? God
Yeah.
forbid.
And book is, I
Yeah.
think that the thing is, you're absolutely right. I was talking to my wife about the places for plants and so on as well, because everyone should be buying bedding plants probably this time of year, but nobody is.
Yep.
And this is
No.
probably killing time for garden centres now. But of course, they're going to miss that whole thing. And if they can't go out and shop for maybe a few months, do people then just not buy for a year?
Yeah. Right.
Could be quite painful.
Interesting impact, of course, on garden centres, but then on the other side of the coin, seed merchants. Oh my gosh. Just all the ones that I remember from of old, where you buy seeds from garden centres, and you can now go direct to them, and they're so busy, and everyone's growing their own stuff from seed because they can't get it ready grown from garden centres.
We've all got time to actually grow them properly for once. That's
Yeah,
interesting, isn't it?
haven't we
Weird.
just? Okay, yeah. So anyway, so that's shares on the foreign exchange markets, Adrian. The dollar was slightly firmer last week. The euro shed about 60 odd points against the euro, which is not a lot in the circumstances. That's about 0.5%. Sterling had a better week of it, rebounding a little bit, but we've struggled to get above that 126 level against the dollar. I think there's weekly resistance there. If you go back on the weekly chart, you've got the daily there. If you have a look, I think it's around 126. To go back a little while.
125.93. We've got a bit
Yeah,
there.
and I think it's banging into that. That's what's causing it to struggle a bit, but it's still, gosh, better than it was at 115 or whatever it was. But so not a lot of action really in comparison
China
to
cut
some.
rates, I saw marginally.
Yeah, I think, gosh, yeah, central banks and governments, whatever they've thrown at this market. Someone was asking me in our workshop this morning, do you expect the central banks to do any more? And I said they haven't just thrown the kitchen sink at it; they've thrown the fridge, the cooker, the microwave, and the tumble dryer at it. I mean, it's just unprecedented. And this is for someone, we were quite active in the great financial crisis, Adrian, and I dare I say I go back a lot longer than you, so I remember stock market crashes and stuff. But this is a lot worse than that. The IMF midweek last week warned that the global economy would experience the biggest slowdown since the 1930s. Now, I do know some old people, but not that old. and so there's no one I can talk to about it, but it looks horrendous. And the weird thing is the market is in this bubble because it's been supported by the central banks and governments, and quite rightly so. But I just don't know what the lasting impact is going to be on the markets. And that's something everyone would love to know. And I certainly don't have the answer.
And I guess this is where these Q1 reports are going to be quite telling, because whilst Q1 is not really, the results aren't going to show us too much, because it was kind of the very, very back end of Q1, really, wasn't it, when it started kicking in? But
yeah, that's right.
More, particularly in the States anyway. But it's really the guidance and what their perceptions will be for Q2, Q3. I mean, that's going to be the interesting part of this earnings season, isn't it?
Yeah, and if the CFOs, the chief financial officers, can't say with any certainty, what's the market going to think? Yeah, let's roll the dice and buy the company. What the hell? They won't. I can't believe they will. A lot of investors are taking advantage of some of the capital raising initiatives by some companies that are desperate to get some capital on board, the hospitality sector in particular, and getting some great deals there. But it's coming at a cost to the companies and their original shareholding, as it were. But yeah, I'd love to have a fast forward button and to see how it turns out, because I believe there's a lot more uncertainty in the market than the sort of the Standard and Poor, the S&P 500 and the Dow are sort of showing us. It just looks manufactured. Anyway, time will tell.
Well, there you go. You kind of love to know who's actually buying up at these levels on the equity markets, wouldn't you? Is it institutions or is it sort of more the retail side? Because I have a feeling it might be the latter. But anyway, we shall see. Commodities, Jerry, you're actually seeing NYMEX crude below $14 now. What on earth is going on?
Yeah, that's pretty shocking, isn't it? It's a bit of a technical picture this morning. This happened overnight in the Far East, obviously. US oil, or WTI, that's the domestic oil in the United States, West Texas Intermediary. It has been absolutely clobbered. Currently trading below 14 bucks, as you've just said. Closed on Friday night around 18.40, something like that. So horrendous. To see it down 20% again this morning is just extraordinary. And it's partly, or a lot of analysts saying it's largely, let's say, sort of 70% down to the expiry of the futures contract. This is the May futures contract, which goes off the board tomorrow. I think the last trading day is today, and it settles tomorrow. Anyway, the next contract after May is June. This is June WTI, and that's trading around 23.30, something like that. So is the price going to suddenly pop up? I don't know. Or is June going to start falling after May expires? We don't know.
So
but
can you just explain just for a second, Jerry, why May will be trading at $10 less, approximately $10 less than June's oil for effectively the same product? What's the problem there?
Okay. In June, they expect supplies to be significantly lower because a third of all US oil rigs are out of action now at these prices. But it's the current production that's sloshing around the system in pipes and in storage tanks that is pressuring any long positions in the May contract. It's still possible that June could fall, but that's why there's a big difference between May and June. Remember, we've got the OPEC plus cuts of 10 million barrels per day kicking in at the beginning of May. Now, you might think, well, hang on a second, you just talked about the May futures contract, but the May futures contract expires before the beginning of May, if you know what I mean.
Yeah, it's a deliverable, but it takes a little while for it to...
Correct. So the contract we'll be interested in is the June contract, when May goes off the board, as it were. But nevertheless, everything is under pressure. Look what happened last week. US oil, or WTI, was off nearly $4. That's about 18%. UK oil, or Brent, which is a global oil contract rather than the domestic focused US oil contract, was down $3.50 roughly, which is 11%. So UK oil, or Brent, got absolutely clobbered as well. And you might say, well, nothing like us, US oil. But if I told you something had fallen 10% in a week, you think, whoa, big moves, very, very big moves. And if you hark back to when Trump was taking all the plaudits for pushing the Saudi and Russian détente, which resulted in this OPEC plus production cut. I wonder how he feels now. You know, it's yeah. Anyway, he probably thinks, well, my approval rating is going up because the stock market's going up, so I don't mind it. But he's got a lot of friends in the oil industry that will be knocking on his door, I'm sure.
Well, I mean, I read reading an article first thing this morning. It was talking about them saying that they reckon Trump will provide incentives to shale companies to keep it all in the ground, not to drill it, basically, or frack it, whatever they're doing.
So. No fracking. Well, I don't think they can afford to. I mean, the most efficient shale oil company apparently has got costs of about $40 a barrel. And you just think, surely at $13, $14 a barrel, you don't need to be a rocket scientist to know the best thing to do is just to turn the switch off and come back when it goes back up again.
I'd like to think even my 3-year-old Oscar could work that one out, but who knows?
Well, they're saying that the authorities in is it Texas, and where's the other one? Is it Oklahoma? Wherever it is, they're talking about forcing the oil companies to stop drilling, to stop fracking,
Yeah.
to take the supply out of the equation, some more supply out of the equation. But you'd think the laws of supply and demand, price goes down, you can't afford to produce it, you stop producing it, so supply stops and demand then increases, and guess what? Price goes back up again, and that's how supply and demand works. But
And the issue being, of course, they can keep producing it and not selling it, but then they've got to store it, and there's nowhere to store it. That's kind of the problem.
None. It's literally every spare capacity is used up. There are tankers floating around the world's oceans full of oil, moored in places waiting for the price to go up, and all they've seen is the price go down. And of course, everyone's hedging the value of their cargoes, and if you're you got a US oil, or you're talking about hedging it at just ridiculously low levels. It's a ghastly situation, Aidan, I've got to say. I feel for the oil traders. There's one Singapore oil trader, I can't remember what his name is, Inion, and whatever the name is, they're having to file for bankruptcy protection because they're completely kiboshed by this move. They're probably hugely long of oil, lots of oil sitting in storage facilities that is worth a lot less than it was when they priced it.
Yeah, frightening.
Yeah,
absolutely. I mean, well, let's just think about that for a second. I mean, let's look at the NYMEX contract to see where it actually has come from, because you kind of get lost in the percentages after a while, don't you? But I mean, here we are at $13, whereas it was $76 in October 18. So in 18 months, it's gone from $76 to $13.
Yeah,
it's just for a commodity that's sort of almost the backbone of the global world, have something that's so volatile in price like that. It's a bit. I just find it mind-boggling, really.
I mean, we're sort of used to volatility in foreign exchange markets at being sort of a 1% move. It's quite a big move in forex markets. Then you look at equities and think, a 2% move, that's quite big. But in commodities, look at crude today. At US crude, it's 20% move in a day.
If you look at the chart here, you got the average true range at there. So that's for those of you who don't know that are listening, it's not quite this exact calculation, but it's effectively the size of the candlesticks, the size of the daily ranges. It's not quite that, but in layman's terms, we'll go with it. So effectively, we've got an average true range at the moment of about $3. But that's $3 at a $20 price. That's a 15% average true range. So you're expecting a normal range between the high and the low of 15%. Whereas, it was $1.70 when it was $50. And so on. So you've got the average true range, which is absolute in dollars and cents, is double now, even though the price is probably about a third of what it was.
That sums it up.
It's nutty.
Yeah.
It's 6 times as volatile now, I suppose.
It's horrendous. But it's sort of, you don't get 20% moves on a day. It just doesn't happen. It is happening, but it doesn't happen. If you know what I mean. But I mean, oil. But the last time it went down here, and roughly at these sort of levels, but a bit higher on Brent oil, I should say. But it was around February 2016, and everyone was saying, this market has just been completely overdone. There was a big panic. All the funds were long of it, and it just sort of hit lower and lower prices, and it rebounded. But that was based on sort of sound fundamentals. This is, 10 million barrels a day cut in production, but consumption's being hit by 30 million barrels a day. You just the numbers don't add up,
No.
There. So that's enough on oil.
Should we move on a little bit? I know that there's a little bit of talk about some of the countries starting to open up a little bit, a gradual reopening of some of the economies. There's an interesting chart on MarketWatch, Jerry, which I know we talked briefly about earlier, sort of gives the phases. I don't know how accurate a lot of this data is, though, to be fair, but of where countries are with new cases after they hit their 100th case, effectively. So you can see the UK as the red number just sort of tailing off a touch there. But of course, the danger now is that we see everything starting to tail off on a lot of these countries, and we start to ease. You've got some countries like Sweden who are basically reopened all their restaurants and schools, and just banned gatherings of more than 50 people and so on. You sort of wonder, as we go into this phase, and the reason I'm bringing that up is because Germany have just started talking about how they can reopen small shops, secondary schools will begin to reopen from the 3rd of May and so on. You sort of wonder if this will be open, and then there might be a case of, oh, actually, God, we shouldn't have done that, and then suddenly it'll tick up again. I mean, what do you think? Is that likelihood?
Yeah, I think it is. Yeah. I've seen plenty of research to suggest that whatever happens, until we get a therapy that reduces the severity of the infection, but most importantly, until there's a vaccine, we're never going to get herd immunity. Herd immunity is anything from 60 to 80% of the population that are immune to the virus by way of having had it or being inoculated or vaccinated against it, and that's just not close. So these epidemiologists who talk about this R coefficient, which is the number of reinfections that each infected person is responsible for, and as long as it's below 1, it means that the infection rate will fall. But if you have gatherings of 50 people, or 20 people, you only need to have someone who's got it, who doesn't know he's got it or she's got it, to give it to 50 people or 20 people or whatever it is, and they do the same thing. And that's how it spread so quickly in Italy. So and until we're testing everyone, we're able to say, no, you haven't got it, no, you've got it, please don't come out again, I'm not sure how this is going to work. I can understand the economic costs compared to the medical and life costs, but I, for one, and I think a lot of people are the same. I know there's been a number of polls where people have sort of seen what's happened to Boris Johnson here in the UK and have thought, well, a lot of worse things have happened to us. We're not fighting a war. We're not, you're having to stay at home and not go out. It's not that bad. And I just think if it is too premature, you will have a significant spike back up again, and we'll go through the same thing again until there's a vaccine. I don't think there's anything clever or secret about this, but a lot of countries are doing different things, and I think the UK have got to take the advice and feedback from the medical experts as to how they react and advise their population. And I think we're doing I'm sure we're doing the right thing.
Yeah. There's another interesting article, which I've only got halfway through it, but it's worth having a look at it, which is, let's see if I can find it now on marketwatch.com, which it talks about whether it's worth it or not. You look at what the actual cost is. I'll just leave it out there and people can have a look on marketwatch.com themselves, but it talks about what the actual cost of all of this lockdown is compared to the benefit of it in terms of what it avoids. I mean, it's purely monetary, but it's quite interesting. I can't find it now.
The trouble cost benefit, when the cost to people is their lives, it's quite difficult to sort of quantify all of that stuff.
Yeah,
and
extremely.
And I'm sure the lockdown will be done in phases. Adrian, I'm of more mature years, and I might be more vulnerable. I don't know, but I certainly think, I've got 3 daughters. I'm sure they'll be fine. They're quite fit and healthy. They do a lot of exercise. They're young. They're probably going to be okay. And I do feel for a lot of businesses that are struggling because, especially in hospitality, but there's no quick fix or easy fix for it. But maybe that's a start. But I think a lot of things, they were talking about pubs reopening. How on earth can a pub reopen and have lots of people crowded in a room, drinking alcohol or eating together? And we also talked about EasyJet. Was it EasyJet that was going to have the middle seat free?
That's just ridiculous.
How does that stop the spread? So some of it is common sense to me, and some of it is based on sort of just logic. I'm sure the likes of Gilead, we were looking at those, Adrian, as well. This Gilead Sciences that have come up with this drug that apparently is quite good therapy for. It's an antiviral drug. It's not a drug. It's not a vaccine. But as soon as you've got therapies that prevents the National Health Service or hospitals in different countries being overwhelmed by people who have to go onto this CPAP and ventilators, then I think it sort of makes it slightly easier to, consider the relaxing of these lockdown rules, etc. But there's a lot of really vulnerable people out there who just should stay put, in my opinion.
This is the article here. Are we overreacting to the coronavirus? Let's do the maths with an S at the end.
Right.
But it's worth a read. So I only got about halfway down it, but it was quite interesting actually. Anyway, let's move on. Mr. Miller, what about well, the data? What about the calendar?
Yeah, good point. Yeah, this week. Yeah, it's not too much going on. As you can see, there's nothing much out today. Let me just quickly get to my notes.
Seems like these calendars are just getting shorter and shorter these days. I mean, ever since the lockdown, are we just not reporting on as much data now? It just doesn't seem like we've got as much now. The calendars normally just feel like they're so much bigger. Maybe they're just rating things differently now.
No, I don't think it's changing much. Sometimes Forex Factory is sort of classifying data as being medium impact when I regard it as high impact.
I think they've moved a lot to medium impact from high, because you don't normally get many days of.
I mean, it's weird. They got the Euro flash manufacturing PMI data out on Thursday as a medium impact, whereas they've got the French and German flash manufacturing PMI data as high impact. So you just got to wonder what's right. But anyway, yeah, let's just go through it. The first bit of data that's important, certainly here in the UK, is the unemployment count or claimant count tomorrow. There's been a big spike in universal credit claimants, but nothing like the US surge in unemployment claims. But so that'll be something to look at tomorrow. It comes out at 7 o'clock. We also have a couple of surveys this week coming out of Germany. This first one is called the ZEW Economic Sentiment Indicator. It's a survey of all these institutional investors and analysts. It's going to be bad. -40 is horrendous, but not as bad as March's reading. But if you click on the graph on the right-hand side, Adrian, you can see how poor this data has been. It's just, been falling off the edge of a cliff. And it's just interesting to see how quickly it changed. They had a tough year last year, and it was recovering, and then it's just fallen back so quickly. And I think it's probably going to be pretty horrendous. So bad, but not as bad for now. Wednesday, we've got CPI data out in the UK. That's inflation data. Well, or lack of inflation data. I think the phrase "down she goes," and I'm sure everyone will now know, although I'm not sure many people will be filling up at the petrol station. I did fill up last week. That's the first time I filled up for about a month. I've taken the odd trip to the office to turn on computers that have just gone offline for some reason. But I hardly get out at all. But I filled up at 105, Adrian. So any logistics operations will be having a significant cut in their operating costs with the price of diesel and petrol coming under such severe pressure. And I'm sure it'll probably go lower as well. So no pressure.
The irony of cheap petrol is, of course, that not many people are actually getting the benefit of it. But then I say that we're not actually using any of it, so that we do have the benefit of not paying anything in petrol, I suppose.
No, that's right. That's right. It's a shame you can't store it, but you need a license to store it. As fun as it would be to have a tanker load of diesel for the next 10 years, you could live off at £1 a litre. Right, what else have we got? What else? Thursday is really the important day, certainly for the Eurozone. You can see all these manufacturing and services PMI data. These measurements are really quite important because they tell us how these sectors are doing. So each economy is made up of a service sector and a manufacturing sector. In the developed West, typically the services account for about between 75 and 80% of Economies GDP. So it's the services bits that are more interesting. And one thing that sticks out like a sore thumb is the expectation for Germany's flash services PMI at 29. I mean, it was so bad in March, and it's expected at 29 for well, in April for March. It's conditions, if you know what I mean. But just horrendous, absolutely horrendous across the board. It's got very, very bad. Are stocks vulnerable? Sort of, but I think we're going to take our cue from the US earnings, and we will get onto that in a second. Friday, we have got retail sales in the UK. Well, just could be absolutely horrendous. We haven't really reflected yet what's gone on, and it just could be just anywhere from really bad to horrendous. I know that economists are expecting a quarter-on-quarter fall of 35% in our gross domestic product if you annualized it, which is just horrendous. It's the same in other European countries as well, but don't be surprised how bad that number is. And then we talked about these German surveys. We've got this German IFO business survey, Adrian, which is the business. It's a business climate survey. All I should say to that is probably very stormy. It's a large survey and probably will tell us how bad conditions really are. So that'll be a nice way of ending the week for the European markets. And then finally, durable goods. This all used to be a high impact number, agent. So I wonder why, in their wisdom, Forex Factory have put it into a medium impact. But it's the core number we look at, and it's going to be a lot weaker than minus 0.6%. A lot weaker.
Okay, and then you also mentioned earnings, Jerry, as well in the States.
Yeah, we can just finish with earnings. It's an interesting week. We've got Netflix is the one that sticks out like a sore thumb. I say sticks out like a sore thumb. There are other really important ones as well, but the reason why I'm interested in that is the stock price has done rather well. And someone said to me, well, who isn't watching Netflix? And I thought, surely lots of people aren't watching Netflix. But anyway, the streaming service has done particularly well. What's the downside for Netflix? I don't really know. If people lose their jobs, and you got 22 million people in the United States over 3 weeks that have lost their jobs, do they carry on paying for Netflix, Adrian?
Well, I had a bit of a rage moment about 2 years ago where I looked at my Sky bill and thought, right, that's it, I'm cancelling it, I'm getting out of it. So I did, and then I went to Netflix, and since about 2 or 3 weeks ago, I subscribed to Disney Plus as well, which has just started to stream here in the UK. And I wonder if, because Netflix is like £9 a month or whatever it is. I actually wonder if the bigger casualty, if people can't afford and job losses, they'll probably keep something, but they're going to drop the thing that's more expensive. I think the bigger casualty could end up being Sky, to be honest, because that is significantly more expensive than a £7, £8, £9 a month subscription service.
I've never had Sky, but I mean, to be honest,
but Sky starts at like £23 a month or something. Plus, once you add in anything that you actually do want to watch, you're suddenly looking at like 50 quid. And I looked at my bill, but it included broadband and internet, and phone. It was like 90 quid a month, and that's why I just suddenly thought this is just ridiculous.
Yeah, that's pretty toppy. Yeah.
So I just dropped it all.
And, well, there we go.
So
there you go. There you go. So maybe Netflix at $9.99 or whatever it is, or $6.99 I think I pay for a service where you can have more than one person looking at it at the same time. Anyway, that's Netflix. We've got AT&T Telecoms, IBM, not computer manufacturer anymore. They're more into services, consultancy service. Coca-Cola, we know what they do. Intel making chips. That's silicon chips, not potato chips.
Crisps.
And of course, crisps. But airlines, wow. So we've had there's some good ones in there. I mean, the FANGs generally, do you remember them? The Facebook, Amazon, Netflix, Apple, Google.
Yeah,
I think that was it. Generally done okay. The ones that, even Apple, which got smashed initially, its stock price has rebounded. So they haven't done too badly. So there are companies, a lot of tech companies have done sort of okay, but the airlines, I mean, I think we've got Southwest Airlines, Delta Airlines. It's gonna be horrendous. I was looking at Delta Airlines. I mean, they're down just huge. Is it 57%, something like that? But but no one's flying, and they don't have enough cash to keep themselves going, and they're having to tap investors, and they need to be rescued by the government and all this sort of stuff. It's horrendous, and hotel groups as well. Just empty with no chance.
Be careful with your stock portfolio. We shall say.
Yeah. So that's it. I mean, Netflix is out on Tuesday. The others come out sort of various times during the week. You need to check a calendar to go into detail of all of those. But I think they're going to be all these announcements are going to have quite an effect on the market. Could be positive. You never know. That maybe they're going to say everything's fine. I doubt it, but maybe they do.
I mean, you look at the results of the strategies that we're teaching our students, and this year we're up best part of 25% from our end of day trading, and of course that's at a time when the stock market's down around 25%. So there's a lot of people flooding into equities, and of course it's an interesting time for that, but it's so cyclical and so speaking of long only investments, it's you need to be able to make money on the downside too, and that's where spread betting becomes more popular. That's where trading CFDs becomes more popular, as long as you've got the good strategy to back it up, of course. And like I said, trading foreign exchange indices, commodities, like we do, we've had some fantastic results from this volatility. Even from just end of day trading, of course, great results on the short term stuff because the intraday volatility is brilliant, but the end of day stuff has been really producing great results for our students as well. So and actually with that in mind, we're actually doing 3 webinars this week, just introducing one of our strategies. So it might be any listeners out there, if you'd like to come along, you can tune in to one of our live events. I'm just putting the link up on screen if you're watching us. But if you're just listening, I'll read out the link. It's bit.ly, so bit.ly/learnts. So bit.ly/learnts. That's our short link. If you click on that, or not click on it, but if you go to that link, that'll bring up a booking page where you can reserve a place at one of our online live trading events where we teach one of our favorite trading strategies. It's called the Sniper Strategy. We'll teach you the 3 simple rules to help you boost your trading results. We'll teach you the strategy in full, and also some of the clever shortcuts that we use to help become more accurate with our trading decisions as well. So if you'd like to come along to that, please make sure you do book your free place online. So that link again, bit.ly, so bit.ly/learnts. And alternatively, to continue listening to the podcast, which Jerry and myself do every week, we're streaming on a number of different places now. You can listen to us on iTunes, SoundCloud, Spotify. You can watch and listen on YouTube as well, or you can tune in for a live cast on the Mondays at trend-signal.com/trendsignal-blog. Actually, that's the video there, but you can also register as well. Get in touch with us and you can register for a live cast as well. All you need to do is search online for the Trend Signal podcast at your favorite podcast place. Okay, so that's pretty much it from me. Jerry, we'll be back next week, won't we? I believe.
Yep, definitely. Yep.
Good, and hopefully a better picture on the economy and infection rates and so on. So stay safe, everybody, and we'll see you again next time. Bye-bye for now.
Yep. Cheers. Bye now.